Hello and welcome to Got Stocks. Today is August 2nd, 2024. It's a Friday. We had a really bad day in the stock market. We're going to look at some of the technical analysis to see what key areas have been broken, where some support areas are. So stay tuned. This is a good one. Now we're going to look at the Nasdaq 100 index. The white line is your 10-day, the purple line is your 21-day, the green line is your 50-day, and the red line is your 200-day moving average. These averages are important. If you look for the past several months, the stock market is in a bullish phase. It will tend to hold the 10, the 21. We had a little correction here. It broke through, traded below the moving averages. It recovered, and then we had a nice little push to the top again. And then when we go into a correction or a bearish phase, it's going to break these moving averages like it did back in this area here. And here we are. We're trading below the 10-day, the 21-day, the 50-day, and we are heading towards the 200-day. Will it get there? Well, we don't know that, but let's take a look at 52-week low is 14,058. We're not going to count the change. And the 52-week high is 20,690. And today it closed at 18,440. 52-week low was 1458. And the 52-week high is 20,690. The 52 weeks, we have a 47.17% increase. Our current close is 18,440. So we have an 11% average return over the history of the market. Some say 8% to 12%, depending on if you're counting dividends. We go on an average of a 10% annual return in the stock market. The Nasdaq's 52-week low is 14,058. The high is 20,690. That's a 47% increase. That's pretty substantial. And then our recent pullback to 18,440 is 11% decrease. So that's pretty substantial decrease. We should have a level of support into this area. So it came down, it touched it, it's hanging out right there. We're going to have a level of support here, and we should have another level of support in this range here. We can potentially hold this area and get a nice little bounce out of here, or this downdraft can continue and push its way down to the 200-day moving average. So we want to keep our eye on this. Let's look at some of the stocks. What you want to consider when these markets get smoked like this, typically what takes several months to gain in profits are wiped out in several days. And that's what's going on. But you want to look at some of the stocks that are holding up the best. For example, Apple recently broke out. We need to pay attention to this area. It broke out and it's been on a couple of months tear from 164 all the way to 237 in 3 months. There's a 44% increase. I would like to see this pull back at least to the 50-day moving average, but it could easily come back to this area here, 199. If the market continues for its downdraft, Apple will eventually get pulled down with the rest of them, but Apple looks really good. So let's take a look at what happened to Amazon. Amazon got smoked. The earnings estimate was 104, the actual was 126. So they beat the street, and what happened here? They got punished for it. They sure did. It blew through the 200-day moving average. If you look at the bottom of this candle right here, all the buyers came back in and pushed this all the way back up. So what is this area? This area is this gap. Came down and it filled this gap up. It's correcting this. That happened several months ago. 2 quarters ago, it's correcting it. Long term, I don't think Amazon's going anywhere. I think they're a great company. I think they are making a ton of money. And, investing, well, when these downdrafts and these devastations happen with these stocks, these are opportunities. Buy some, but if you're trading it, then you have to go by the technical analysis. If you're investing in it, well, these are opportunities that you can almost bet that in the long term, this stock will do good. Let's take a look at this guy here. This is Broadcom. Broadcom gapped up, and let's take a look at the earnings. The estimate was $8.15 a share. The actual was $10.96. The stock gaps up. Now, they also recently did a 10-for-1 stock split, if we look right here. So this stock was trading at $1,851 was the all-time high. So this is a 10-for-1, so now it's trading at $185. It closed today at $143.82. So this is another good one to look at. It's come back down to the support area. All this used to be resistance. It gaps up through here. Now it's going to become support. And if you're looking to invest in this company, well, now's potentially a good time to look at it. Can it take some more heat? Absolutely. It can essentially go all the way down to the 200-day moving average. If you're trading short term, then you need to place your stops in there. You need to have your setup, whatever your setup is. Costco looks pretty good. Google still looks pretty good, even though we're off of the highs. Look back at this area. Boom. We have a gap down. We have a gap down here. The stock retraces back to the 200-day moving average. A lot of times stocks tend to have characteristics, and here we have a nice gap up, and then here we have the balance range of a nice gap down. The stock is currently hitting a support level of 167.16. Can it go a lot lower? Absolutely. But over time, I think Google's a pretty good company, and I don't think they're going anywhere anytime soon. Meta, look at Meta. The market gets smoked today, and Meta just kind of hangs out. Your moving averages, the 10, 21, and the 50 are all coming in alignment with each other. Meta stock looks really good. If the market continues in a downdraft, all of them will get smoked, and you just got to kind of pay attention to the leaders and where they're going to. Let's take a quick look at Nvidia. Hit a low today of 101.37, right? Which we had a target of 101.52, 96.02. We have a gap here. If it cannot hold this range that it's in right now, it's going to 96.02 as the next stop. And that's going to be a key level. If you look at this area here, all through here, this is a nice balance range. This is going to give you a nice level of support. I would just put the brakes on Nvidia right now. It's still trading at a high PE. And let's take a look at Tesla. Tesla gaps up, boom, and then another gap up, boom, and then it gets smoked, and then it goes to a consolidation period, and then off to the moon with Tesla. All it did was go to the top of this range right here. From this day of this downdraft in December, drawing a line straight across, and eventually that's going to be a level of resistance. And then several months later, it proves to be resistance and it pulls back. It's hanging out at the 50-day and the 200-day moving average. If you're looking to buy this is actually a pretty good potential area to look at. If you like this type of trading, this is a very volatile stock. Let's get back on point here to the NDX. The Nasdaq 100 gap down. We had a horrible day, 449 points. This is pretty substantial move, but it's landed right on a support area. We want it to hold here. If it doesn't hold here, we're probably going to be looking at another downdraft closer to the 17,643 area, possibly the 17,784 area, and it could potentially go to the 16,984. Now, in these downdrafts, these are opportunities to buy more, get heavily involved in these stock markets, because over time, this is how you make the most amount of money, is on these downdrafts of good companies. Don't buy companies that are weak with bad earnings, a lot of speculation. You can if you have extra money, but if you're investing in good companies, you want to invest in the VOO, the Dow Jones Industrial, the VOO, the VOO, that's the S&P 500, and then the NDX. There's a lot of different ETFs for the Nasdaq 100 or tech-heavy ETFs. And that will complete our analysis of the Nasdaq 100.
Thank you for tuning in. I hope this video was helpful and brings value to your process. Be careful when trading and investing in the stock market. It's very risky. And always remember to dot your I's, cross your T's, and don't forget the Z. Happy investing.